All right, welcome once again to another episode of Real Estate Podcast, Real Estate Wise, and we are going to talk about Huntsville, Alabama, and we're going to use the Redfin data center housing market update on a weekly or monthly basis. So we're gonna talk about this with Maureen McCann from Spartan Invest, who happens to be a part of the Spartan Invest, a real estate turnkey provider in the Alabama area, and so you guys are expert in this area. You help out of state real estate investors to buy cash flow properties in Huntsville, Alabama, new construction right now, which is very exciting news. Anyway, so my name is Seewing Yee from the Yee Real Estate Network. So without further ado, let's talk about what's been trending data-wise. So very exciting to share this real-time data about what's going on in the Huntsville market. So let's get started. All right, Maureen, sounds good?
I am game. Let's go for it.
All right, so feel free to quickly interrupt me and share your thoughts anytime because you'll have you know what's going on in your Huntsville market. So let's go over there are four trends from 2019 to all the way to 2022 in Huntsville, Alabama. So 2019, the average median home price was 218,000. Is a 2% year-over-year appreciation from 2018. And then we fast forward into 2020. The appreciation has increased year over year 13% to 247 is the new median price. Then look at the skyrocketing of appreciation from 2020 to 2021 during the pandemic, 19% appreciation year over year from into 2021, which is brings the median sales price of 296. Then August 2021 until right now, August in 2022, another 15% appreciation and the new median price of 341. So to recap the appreciation for the past 3 years during the pandemic, we all know what's going on during the pandemic. So from my starting point, 2019, 218K, from 218 to at the top right here to 341. So we're talking quadruple appreciation rate. So this is surprising to a lot of people because most of the national media and home buyers and investors, they may not be aware of what's going on in this submarket because there's no such thing as a national real estate market. Real estate is local. Every local area, every city, every region have their own unique real estate characteristics. So with that in mind, Maureen, since your company, Spartan Invest, represent properties in this area, you have boots on the ground. So what are your take about this very surprising, consistent double-digit appreciation year over year in the past 2.5 years? So what are your
Oh,
thoughts?
I have very happy investors who bought with us when we first started in the Huntsville market. They are doing some cash out refinances, taking out some more of the equity growth and investing back into additional properties. So what this Redfin graph clearly illustrates is something that I've actually just seen happening without the graphics. I've just known it and seen it because of the investors that purchased with us, back in 2019. So this is I love this graph simply because this really clearly indicates what Robert Kiyosaki calls phantom income. Phantom income is equity growth, right? You're not doing anything. I don't have investors that were doing extra things year after year to increase the value of the property. They just purchased it at a time. They bought and held it, right? Because it's buy and hold. So they bought it, they've held on to it. And not only did they get the rent escalation over that same time period, they also got this incredible, phenomenal equity growth, which this is one of the main pillars of why you invest in real estate, is because of this equity growth. And everybody knows it. Anyone that's listening, if you've got your own primary home, whatever market that you live in, some of us have seen more exponential growth than others, but it doesn't matter. It's one of those things that real estate increases in value over time. Yes, it fluctuates. We have ups and downs, but we're in a very strong growth market on the equity growth because there is not enough housing for the demands in this local market.
Yeah, I agree. So very well put. So Maureen, let's go over several other metrics, and then we will determine what are the short-term trends going on. There's a lot of negative headlines out there, but as a real estate investor, you need to try to focus on your real estate action plan and try to ignore all those negative headlines and focus on your own financial plan. So with that said, let's go over the what's going on. Let me share you some very good data. Let's look at listings. All right, let me find that.
Active listings right there.
Yeah, active listing. Oh.
For you, good. Keep going right there. One up, two up.
Oh, right here. Okay.
Right, you got it. See, it's teamwork. It's all about teamwork.
Exactly. I need my reading glasses. Anyway, so active listings for August 2022 is 1,894. That's like 9% less active listings year over year from last year, 2021. So that means there's some not enough inventory available out there. Then let's look at the new listings these past 30 days, what has transpired. The new listing, there are 280 new listings. If you compare to last year, year over year, pretty much the same. And then let's go over the pending sales. Pending sales are, wow, very interesting. Pending sales are going higher. So that means the demand for buyers are increasing in light of the higher interest rate from 3% to 5 to 6% right now, which is freaking out a lot of people, but not in this market. So the pending sales have gone up. I know 1 month trend is hard to predict what really transpire until we see more data down towards the end of this year. But it tells you that the pending sales is 31% higher than last year. So that's a good sign. Now, so let's keep this number to 262. Then let's click on a home sold. Home sold 262, 230. So very consistent. Pending sales, most pending sales end up consummating transaction at the close escrow and so forth. So very, very strong market from buyers and sellers alike. So let's look at if there are any listing price drops. Yeah, this trend is across the board everywhere in the country. It's just that a lot of sellers, they are not aware of the lower demand as a result of the home affordability factor that we are experiencing right now due to high skyrocketing housing prices, and the interest rate has risen, making a lot of people cannot afford. That's why we're seeing some challenging aspects of it. So, but then the price drop means, according to the Redfin definition, is percent of active listings with price drop, which is only a little bit more than 5%. So that's quite low. So I think the sellers in the Huntsville market understand that the market has changing. The demand is not as high, so therefore they're not overly listing their price beyond the capacity of what the buyers are demanding. So nothing that shows any kind of red flag. So
yeah, and I would add this, Seewing. I think it's important to note that, if you're seeing, like I've gone on Zillow in different markets and I'll see, price cut $50,000, price cut $100,000, like in the California market, say, or you might see a little less number in these other markets, maybe like Huntsville. I haven't checked them, but I will for the next call. So, but what's happening is you've got people going, oh, I want to sell my house, and I'm going to sell what my neighbor sold for 3 months ago, which was an overinflated price. And now and 3 months ago, the interest rates were lower than they are today. So of course, we're going to see a softening, but when you see these price cuts, it doesn't mean there's depreciation. It's just a deceleration of equity growth, or it's a deceleration of appreciation. Just because you're going to have sellers in this market that need to sell, whether they're new build, you may have a new home builder that's built a ton of inventory, and they've got to get their credit line moving, so they've got to sell. So they're willing to take a little bit of a haircut, but yet it's still above what the average market value is. So we have to kind of keep that in mind and not get confused with, oh my God, there's, the housing market's crashing and people are slashing prices. No, they overinflated the after repair value, and now they're giving a little haircut, but it's still above what the average market value is.
Yep, absolutely. Yeah, I mean, you're gonna, people gonna hear, a lot of news media and the YouTubers out there with clickbait types of video. They are, always like crashing, minus 50%, minus 80%. Those are clickbait videos. They are not legitimate as far as I'm concerned. So you have to get educated properly, and we are doing our best, Maureen and I, to show credibility and accurate reporting of what's going on in the real estate market. So because of low supply of inventory and still moderate demand, we do not see any kind of crash situation. So that's but let me validate that, that by a typical balanced market where inventory equals demand is around 4 to 6 months. So let's go over what are the months of supply for right now in the Huntsville area. So and right now, as you can see, weeks of supply is 8.5, right? That's 2 months. 2 months supply of inventory, to me, is it's still a historical low inventory in this market, and the demand is very, very high. So it's still a heavily a seller's market. We can make the argument that we are seeing some little bit of multiple offer, maybe 1 or 2 or 3 offers per house in the Huntsville market based on the data I'm seeing so far. 2 months week supply, that's so low, right?
We need 6 months at least, and we're not there. We're not even close to it, because as properties come on, that just like as we're seeing it, as we're building new construction, we have people approaching, even our construction workers on site, asking us if that's going to be a house for sale to a owner occupant or to a renter. So that's what we're seeing, just boots on the ground intel, like something that you're not going to get here on a Redfin weekly housing market data report. This is what the boots on the ground, what we're hearing and seeing and experiencing in this particular market.
Exactly. Now here's the median new listing price back in May of 351. 3 months later is 333. It does not mean that the actual price of those homes have dropped. It's not at all, because the new benchmark 333,000 is based on the affordability factor, right? Because buyers out there with a higher interest rate, they can afford less of a house. Mm-hmm. That's why you're seeing the new median price 333,000 right now, August, versus 351,000. So this trend tells me Huntsville Alabama market is still very consistent, with some very slight dip from month to month throughout this year, 2022. So again, no red flag. If the interest rate stays at 5.5%, whatever, we're gonna see this kind of somewhat of a healthy market going on. No more bidding wars, no more multiple offers, no more 10, 20, 30% above asking. Those are unsustainable. So in a way, I'm glad we're coming into a healthier market where buyers have a chance to compete against other people. So what are your thoughts on that?
Yeah, I mean, I just look at, I look at even just a year ago where you clearly illustrated it so beautifully earlier on in the video here, is, the growth rate in capital appreciation just from 2019, it's been exponential. So seeing a softening a bit makes sense from, an increase in the interest rate, but it still hasn't, you saw the one slide you showed with the, in the last 4 weeks, the amount of houses that were pending or active listings they have gone up, as far as sales. So I love looking at data because you kind of interpret it in a lot of ways. But one thing that I do recognize is that data does not lie. So you can have clickbaiters who will lie to get you, to pay attention to their site so they can get more advertising dollars. We all know how the world works. But when you really look at strong analytics and data, you as an investor have to make interpretations of that data. And sometimes it just helps when you've got someone like Seewing who's got decades of experience of looking at these types of trend lines and recognizing that there is not a crash, there's not chaos, there's some softening or deceleration of the out of control appreciation, which we've all benefited from as investors and as primary homeowners. It puts the first-time home buyer at a disadvantage, and it puts a renter who wants to buy a home at a disadvantage because the affordability index now is too high as the monthly, because people buy off of the monthly payment. They don't buy on the purchase price because they go, hey, can I afford this monthly payment? And the monthly payment, as the interest rate rises, then the monthly payment rises, and then it might be too tight for them. So they're going to sideline themselves until they have an opportunity where the interest rates go back down to make it more affordable to make that monthly payment and then get out of being a renter or into a buyer. So this is, I love these data points because this shows a very, very strong market where the demand is still there. The population growth is accelerating, so much so to the tune of 42%. The net migration from the U-Haul report showed moving into the Huntsville, Decatur, Athens area. So, you kind of put a bunch of different, it's like putting pieces of a puzzle together and looking at the U-Haul data, looking at the Redfin data. You can find other data from other resources, but clicking it all together to see the bigger picture is what we are trying to do here for your listeners and viewers.
Yeah, absolutely agree. I think that pretty much concludes our presentation. Just before we do that, the average sale to list price ratio in August 2022 in this Huntsville market, the final list price is the sales price. So the buyers are paying exactly what the seller are asking for price. There's no overbidding, there's no underbidding due to the interest rate rise even. Whereas before the interest rate has risen dramatically in the past few months, back in April, you will see that there are still bidding war going on because the average sale to list ratio was 1.02. This means that the buyer have to pay higher than the asking price during that time. Now we are back to a healthy market with a higher interest rate. So if and when the interest rate gets lower, investors, you're in a different, you're in a different situation as a listed investor from out of state. What I'm trying to say is, so anyway, the Huntsville market, based on the trends that we've seen, that we discussed so far already, we see a very, very positive uptick. So investors, when you buy in this market, because of still a low supply of homes and still high demand in this Huntsville market, we expect home appreciation, not double digit or triple digit we have seen recently, but single digit appreciation, that's fine. 6, 7, 8%, we're okay with that. So investors, you're not buying based on payment. Investors, all you need is 25% down payment, right? And qualify to get a mortgage, hopefully. And then you find a market as in Huntsville, as in Spartan Invest, when they have a new build for $250,000, $260,000 new build, it rents for $1,800, $1,900. As our projection predicts, at even a 25% down payment, even a 6% mortgage interest rate, you can still achieve monthly cash flow, net monthly cash flow after all the debt service and the mortgage payment has been paid by the renter. Then the renter is making you rich.
Yes.
So you can still have monthly positive cash flow of a couple $100 using this new bill performance, which we discussed. And then even with higher interest rate. So by now, then when the date the interest rate and marry the house, that means okay, you can, then later on you can always refinance. Come on, investor, you You need to be adaptable. You are adaptable. You are very flexible. You're not a primary homeowners. You buy for positive cash flow right now, refinance later at a lower interest rate. It will bump your cash flow higher than it is right now. But at the end of the day, right, you're buying for the long-term buy and hold. You can because the skyrocketing rents are coming, the bidding wars coming. You can get more cash flow as we speak in the next 12 to 24 months beyond today's projected rent. Come on.
Right.
Yeah,
no, that is very true. And it's just, and sometimes we just have to get them to look at the big picture, the long haul, right? Because this is, again, I've got my pro forma up here on my second monitor. And like I said, the first year cash flow, $2,300 doesn't seem that sexy, but year 15, you're looking at $12,000 coming in per month. And guess what? You didn't do anything except for hold the property. You bought it. You took the action to acquire it. You secured it at a fixed rate payment over a 30-year period. So that payment's never changing, but your rent's going to go up.
Yep, that's right. I mean, yep, all the great reasons to buy in spite of what's going on out there. So all you gotta do is, have enough courage to take action. Take action, right? Is the key to your financial success. So as we conclude this presentation, you have any last second, final thoughts before we leave?
I would just say if you continue, if you do nothing, you get nothing. If you take a risk and you do something, you wind up getting something. And so I would say, as if you are kind of sitting there and figuring out and questioning, what should I do? Should I do it now? My friend, my colleague, they're saying it's a bad time. Ignore the noise, focus on the data. This is all stuff that Seewing looked up online. This is stuff that you can verify, trust but verify. And then when you get to a point where you go, you know what they're saying makes sense. I've got the long-term vision. I found the long-term company to partner with. They've got the good product. And all you have to do is pick up the phone, reach out to Seewing and say, hey, tell me more. So I would say, if you take that first step, that's a good one.
Absolutely, absolutely. Maureen McCann from Spartan Invest, our networking turnkey provider from Huntsville, Alabama, and other markets close by in Alabama, Tennessee, and northern Georgia, and soon to be the Carolinas. Wow, you guys are expanding like wildfire.
Because we know a good thing. I've been doing this for 13 years. We've been Spartan Invest is almost 10 years in the business, and so you and I are very passionate about this because we know what investment real estate has done for our individual families. I've seen what it has done for the other families that we serve. And so it's really just an honor and a privilege to be able to take what we have learned from firsthand experience and be able to share it here in a platform where investors are looking for truth, looking for knowledge, and finding truth in the data. So I hope that you guys enjoyed this and learned something from it. And we've encouraged you to do something different, get out of your comfort zone, and try on real estate, because it is a tried and true, proven centuries wealth builder.
Absolutely true. Maureen McCann from Spartan Invest. Her contact information at the bottom of my video. But verbally, your email is mccann@spartaninvest.com. It's that simple.
You can find me there. Just go to the spartaninvest.com website. You'll find me.
And tell them that
Seewing sent you.
So always ask them when they enter.
I always do. Always do.
Anyway, thank you so much, Maureen, for another great presentation. Thank you so much, everyone, for listening, and I'll see you guys on the next video. See you guys on the other side, and everything you want in life is on the other side of fear, F-E-A-R. So thank you so much. Have a nice day. Goodbye.
Bye.